All right. Here we go. We got the day before Thanksgiving. Welcome on in, everybody. Pretty exciting day. You've got, well, first of all, we got to talk about Google. That's not the most particularly exciting. We're going to talk about it. But I'm pretty excited. Tomorrow's Thanksgiving. We'll hang out with the family, which would be cool. I hope you get to as well. But I'll probably do some kind of like Thanksgiving live. No guarantees, but I want to do something because I know some of you out there might not have somebody to hang out with, and so I want to be there for you. I don't want anybody being left alone this Thanksgiving. But otherwise, the stock market's going to be closed tomorrow. We've got Black Friday, obviously, coming up in 2 days. We already put our Black Friday stuff up if you want to see it, either at meetkevin.com for the alpha report, or the House Hack AI is out. You can see that at househack.com, reinvest.co. It's the same company. Anyway, so with that out of the way, let's talk a little bit about the market here, and let's see what we've got cooking. Big thank you to those of you who already joined the Reinvest AI. It means a lot to us. It means y'all are. You believe in what we're doing with real estate and what I think will be the world's first and greatest real estate AI. But anyway, look at this. So we were talking in the Alpha report this morning in the course live that Google is somewhat of a canary in the coal mine for risk. And so without going into all the details, this is bad. Okay, so bottom line, if you really want to see the AI moves move, you want to see Google move as well. So I really want to watch Google today. The market did prop up over really the last 2 days. I think probably one was a little dead cat bouncy, but two, the hassett rally. I think Trump really timed that pretty well to sort of find a weak period of time in the stock market to say, hey, but I'm going to put a shill into the Fed. I thought it was so funny. Yesterday, if you watched my real estate disaster video, did you see the Jerome Powell part in it? I thought it was hilarious. Of course, that's me. Of course, I thought it was hilarious. But if you go look, let's see, where was it? It was somewhere right here. I'm talking to this neighbor in the backyard, and I'm talking to him about everything's gotten so expensive. And then the neighbor's like, oh, well, hopefully the Fed will cut rates. And I'm like, yeah, you just need to get rid of that Jerome Powell guy. It's his fault. And the neighbor's like, I know, absolutely. 3%. What happened to that? And it's like, all right, well, there's your little sort of sentiment check, I guess, out there on the street as people are pissed because rates are higher. But I thought that was an entertaining moment, just sort of being out on the road doing real estate, and then now we're talking about J-Pow. It's like you can't get away from J-Pow. It's kind of, imagine being J-Pow and just like everybody's talking about you, but nobody really likes you because they just associate you with higher rates, right? Higher credit card rates, whatever. So kind of interesting. Anyway, so something to look at this morning. This morning we've got this MIT study out that CNBC is reporting. Massachusetts Institute of Technology on Wednesday released a study finding that artificial intelligence can already replace 11.7% of the labor market, or as much as $1.2 trillion of wages across finance, healthcare, and professional services. Wow. Take it for what it's worth. It's a study, so, who knows, right? But, usually studies always end with, now we encourage other people to do more studies. And so I always think that's funny because it's just sort of like, well, what was the point of you doing the study? But whatever. No, I get it. You can't be perfect with these. House Hack content is the best. It scratches the same itch I get when I watch Homestead content. Oh, okay, well, that's cool. Thank you for that. We associate J-Pow with the money printer meme. Well, we used to. Then he turned into the money vacuum, eh? 11.7 LOL made up numbers. Maybe. So... yeah, it's interesting. Okay, interesting comments y'all have. But anyway, let's go see what they're actually saying here. In the meantime, let me go... let me see here. I'm going to go throw that into our Meet Kevin tab. So MIT study. Yeah, remember you can get these all these little notes that I write. You could get them in the Meet Kevin app pretty easily on iPad or iPhone or Android. MIT study, AI can replace 11.7% of U.S. labor market already with today's tech, is what they're arguing. So that would be save. I think that's interesting, actually. Save 1.2 trill in wages across finance, healthcare, and pro services. The study was conducted using a labor simulation tool called the Iceberg Index. The index simulates how 150 million workers across the country and how they're affected by AI. Iceberg Index, which was announced earlier this year, is a forward-looking view of how AI may reshape the labor force. Lawmakers were preparing bills. Basically, we're creating a digital twin for the economy. Nice NVIDIA reference there. Market treats 151 million workers as individual agents, maps more than 32,000 skills, and 923 occupations. That's an interesting phrase. I actually think that's, like, I never thought before, like, how many skills do you think there are in the country? 32,000 skills. I never thought of that before. Never thought of that. You know, like, I'm teaching my children. Well, I mean, they're using this like school typing program. And what we're doing is we're incentivizing the children, Max and Jack, to type correctly. Because a lot of the kids, I mean, they're 7 and 10, right? So a lot of kids, they'll do those typing classes and they kind of just like get their homework over with by like spamming or finger pecking or whatever. But they have leaderboards in the classes. And so we incentivize them to, like, you know, climb in the leaderboard or to, you know, do certain challenges or whatever, but they have to use their home keys on their keyboard. And, you know, like, I don't think I'm the fastest typer, but when I go type for them, I'll go type, you know, 110, 120 words a minute or whatever. And they're like, oh my gosh, that's so cool. I'm like, well, you have to use your home keys if you want to do that. And now they are. And that's just like, if you think about it, that's just one of the 32,000 skills that exists. And I'm like, damn, that's kind of cool. 923 occupations. You got to find something in there that you like, but I never thought about how many skills there are. That's cool. Somebody says, Master Chief True Spart. Dude, okay, have you seen the Master Chief helmet, by the way? Target has them. Like, I want this for Christmas. I'm not going to end up getting it for Christmas. I doubt it, but I thought it was so cool. Look at this. Apparently, I mean, it's got a 4-star review, so I don't know what's going on. They got one left in the Schnard. Halo Master Chief helmet. It looks so sick. It's got, like, lights, and you can wear it. They don't show anyone wearing it. But anyway, I don't know why that came up. Oh, because somebody said something about Master Chief and Spartan, but whatever. This is very interesting. Okay, then measures those. Researchers found a visible tip of the iceberg. Layoffs and role shift computing represents 2.2% of wage exposure. Visible tip of the iceberg is 2.2%. Beneath the surface lies the total exposure. So only 2.2% immediately. 2.2% immediately affected. The rest over time. Okay. Those areas are sometimes overlooked. Human resources, office administration, logistics. It's meant to give an idea of what AI can do, blah, blah, blah. Okay. Government. Okay. Business leaders identify hotspots, prioritize training, blah, blah, blah. Okay. Yeah, interesting. I mean, it's the nature of the beast, I guess. All right, let's go pop open some new tabiolas here and see what else we're cooking. So, what does The Economist have for us today? Google pierced NVIDIA's aura of invulnerability. The killing of a Hezbollah leader. Bolsonaro is jailed. More to cholesterol than simply good or bad. Wrong. Startup piece. High gold price. High gold price is luring prospectors to California's mountains. Are you kidding me? There's a literal gold rush going on? No, there can't be. And let's look at this piece. So he reckons it's worth $20. What? Duck the pan 3 times, he continues, then repeat the whole process. Slowly but surely, rocks and sand wash away and leave behind a golden pebble about half the size of a pinky nail. So like 5 millimeters. That's a big piece. He reckons it's worth $20. Wow. Dude, I want to go panning for gold. Oh, look at that. But how do you know it's not fool's gold? Wow. That's kind of cool. Who wants to go pan for gold? It's like a literal little treasure hunt. You know what you should do is just bring kids and then have them go pan for you. And then, you pop a coffee or a Diet Coke or a beer or whatever the hell you're into and watch. Let's see here. Google S. Pierce. Speaking of which, let me go see how my little canary is doing. Still chilling out, laxing over here. 1.9, not my favorite. It's keeping Tesla flat. Although Hood's memeing a bit, huh? Look at that, 7%. I mean, I don't think it's so much of a meme. It's more of a rebound. Look, it went down to 101. So, line to line here. Excuse me, within $2, right? I have 100 line here. That's mostly just a psychological line that I put there because it's just a round even number. So it says child labor. Exactly. If you can't have child labor, what good is labor? So look up the article. Okay. I'll do what you say. Private debt defaults set to climb as middle market firms wobble. Friday is open, half day. Yeah, half day for Friday. And today's a full day for what that's worth. And it is also, in the we should talk about the porta potty one too. Private, I think it was USR, private toilet company, bankrupt, Bloomberg. Yes, Fortress are facing total losses. So we'll look at those. Okay, let's take a look at those. But yeah, I mean, if you haven't, I don't think I put it in the description here. Poop. I should really update that. Sorry about that. Okay, let me do that really quick. I'll update the description right now. If you haven't seen it yet, the Black Friday coupon code right now is Black Friday 25. So Black Friday 25. And then that applies both at househack.com and Meet Kevin. And if you join either of them, you'll get a discount on the other one, once you join. So just a little trick. Like if you're thinking this Black Friday, I want to get the Meet Kevin Alpha membership and get lifetime access on that. And you're like, I may as well get the Reinvest AI at the same time. Just buy one, get in, and then when you're in, use the, the whatever upsell offer or whatever pops up and you'll get the best deal. But anyway, let me update that description really quick. So the code is, let's put that here. Black Friday 25. There we go. And that's for the AI product as well. Okay, cool. So that'll be updated. Okay, so let's look at those articles. Okay, so what we have over here is private debt defaults set to climb as middle market firms wobble. Okay. The HouseHack funding round is still up. Yeah, if you go to Reinvest, you can see, just go to househack.com. Because people screw up the .co, but I don't want to pay $1 million for reinvest.com. Nobody cares about the domain anyway. It's going to be an app, But anyway, you go to reinvest.co or househack.com. The first portion is all about the AI, and then you can also invest in Reinvest, right? And then it scrolls down to the invest section. You can look at our real estate or whatever you want. Or you just click the big buttons at the top. All right, let's focus on these private credit articles. So what do we got here? Defaults are set to are poised to rise across the $1.7 trillion private market next year as a growing number of middle market firms are experiencing stress. Interesting. And this is according to Kroll bond rating firm. So what do we have here? So Kroll bond rating firm basically they're saying expect more defaults. Great. but I want to see if they have any details here. Expect more defaults in 2026. This is 61 borrowers in private credit market have a CCC minus rating. Okay. The firms tack that label on, that rating is for firms facing severe operational or liquidity challenges. The rising share of firms falling into CCC minus, triple C negative, or triple C minus cohort is a clear signal of pressure building in certain segments of the direct lending market. Okay, so the problem with this is, as pressure builds on the existing pipeline, the new pipeline slows because lenders get more cautious, right? That's the problem. Okay. The largest companies sitting at the riskiest rating buckets were concentrated in healthcare and tech. As more borrowers are sitting at the riskier end of junk, they're also facing upcoming maturities. Nearly 30% of companies with debt maturing before the end of 26 had high leverage or negative earnings. Wow. 30%. 30% of companies with maturities in 2026 had high leverage or negative earnings. Negative, that's going to be EBITDA. Okay. Default rate was low in the third quarter, but it doesn't believe the low payment default rate reflects the true extent of the stress. Oh, that's not good. Okay. So in other words, so far we're still, we're kind of being misled. So that's interesting. You do see this, by the way, that a lot of these companies have been able to, refinance their debt pretty well. This reminds me even of the Jay Clayton article yesterday. The Jay Clayton article yesterday talked about private credit moving trash from Fund A to Fund B, and no mark-to-market valuations. So, a lot of gaming of trash basically is going on, and keeping default rates low, including payments in kind, which is basically a way of saying, hey, just add it to what I owe you. I can't pay you this month, but just add it to what I owe you, is really a good way to think about it. And so really what this is this is a pending, collapse, but no one knows when, right? That's really what it is. Oh, see, people are gonna think I'm using AI because I put the little double dash. Whatever. Okay, so you all see me do this, so it's not AI. But anyway, this was the toilet. Shitty private credit deal. 100% loss on porta potties. Yeah. Isn't porta potty a brand? I should be careful about that because you don't want to slander porta potty. Is it a brand? And what the hell is a porta potty? I know it's a portable toilet. Maybe it's not a brand. Maybe it's not a brand. Well, whatever. So take a look at this. Fortress, Ares, and Blackstone combined are losing 1.4. Are among those combined losing 1.4 billion, investing in in United Site Services (USS), a portable toilet company. All of that 1.4 billion investment is being marked to zero. That's crazy to me. So I always say that when Fortress gets involved, they're like the last lender. Fortress getting involved, this is my opinion, okay? I could be wrong. My opinion. is a red flag that you're already borrowing from stress lenders, right? Like Red Robin Gourmet Burgers borrows from them, and has a JP Morgan line. I am even more nervous about that combo because JP Morgan is known for pulling lines, because JPM is known for rugging. See tricolor, right? So, okay, so what happened? The funds were among anchor investors in so-called a continuation vehicle. Oh, that was already a bullcrap scam that Jay Clayton warned about. Oh, that's interesting. The toilet company was already funded by a continuation vehicle, which is exactly what Clayton warned about yesterday. Aha! Created in 2021 to buy USS from another private equity fund. The deal valued USS at $4 billion, allowing investors of the older fund to cash out. This is so scummy. But it left investors in the new vehicle with a concentrated bet in porta potties. Its sole asset. Well, that's a crappy asset. A total SH9T show, man. How do we know you aren't AI? I could be. I could secretly just be a tensor processing unit. That's never mind. Anyway, Kevin, I was invited to the Knights Templar. I know how wicked they are. We the people must abolish the Freemasonry to save humankind. Did I just like teleport back to like the 1400s or something? Is there like YouTube chat here from Assassin's Creed or what's happening? Okay, weird. But anyway, what year were the Knights Templar? It was like 1400s, right? Oh, dude, I was so close. Ultimately suppressed in 1312 is when I guess they fell. Founded in 1119. If I just said 1300. Wait, can I go back and say 14th century? No, Kevin, that is cheating. Okay. So Workday could be recessionary. Check it out. Okay. So, my little canary is still bleeding over here. This is my tell today, especially for Tesla. Tesla, AMD, NVIDIA. I wanted to attach those to activity in Google. Workday. Oh, did they just report? Workday. Oh, they got a lot of news. Workday price target. They must have just reported. This is a lot of news. Yeah. Oh, here it is. So 18 hours ago, announced its third quarter results. And they ticked up their full year subscription revenue. I mean, we'll go look at them in a sec. I'll go look at their financials. We'll see what's going on. Why am I getting these ads? I don't mind. Anyway, the unraveling of USS stands as the most high-profile examples of a continuation vehicle can backfire. Deals have come into popularity, representatives for Platinum Fortress, blah, blah, blah. Platinum hasn't made a final decision. Continuation vehicles account for almost a fifth of exits in the first half of this year. First half of 2025, 20% of exits were to continuation vehicles. Interesting. Let's see here. Continuation vehicle. Company has struggled to live up to COVID hype that a return to in-person events would be a boom to the business. Oh, that was the bet? Oh, guys, post-COVID, everybody's gonna have to take dumps again on porta potties. Bro, nobody wants to use a porta potty. They're nasty. Ugh, I don't even want to drink my coffee thinking about porta potties. It's just gross. Anyway. All right. Let's go look at, let's do a quick look at Workday. We're interested. Cody's also interested. Be interested in Workday commentary. They are huge like ADP. Workday Investor Relations. All right. You know what? Let's look at their earnings call. See what they had in their earnings call. Sometimes the earnings call is more interesting than the revenues. So, Workday. Let me also see what the estimates were. So, Q3 revenue beat, Q3 adjusted EPS beat, subscription revenue for Q4 forecast beat, operating margin matched. So everything like matched or beat. So what the hell? Stock down 10%. Logical. Stock market's not logical. But let's go look at the earnings call. Let's see what they got. Quick, Kevin, post the Sydney Sweeney jeans photo to balance it out. I know, right? Quick. All right, let's see here. So this is going to be Workday. What's the ticker for that puppy anyway? Oh, W-Day. Okay. W-Day earnings call. All right, let's go find out what's going on at Workday. Let's see what's inside. What happened here? Why is the stock down so much? So, growth. All right. Delivered, okay, subscription revenue, 15% growth. Okay, 20% growth. What's going on? Growth, impact of the Fed. Paradox acquisition. Okay, let's get into the Q&A section here. Questions. So, Diversa ROI, 1 billion AI actions year to date, blah, blah, blah. Feedback on the venture-backed vibe coding startups. Nobody cares. So what's going on here? Okay, what are mechanisms that you guys have if a customer were to lay people off to keep growing? Ooh, about layoffs. Okay. So while there are some layoffs out there, we're still growing headcount. Okay. Selling back to the base. Trying to punt that a little bit, huh? Okay, yeah, because layoffs could affect their growth rate. That would make sense why people are nervous about that. We're seeing an acceleration growth in Eversor. I don't know what that is, particular component that they have. Let's just specifically look at layoff. Only one mention of layoff. Okay, what about renewal? Renewal activity. I mentioned Paradox, very confident. Talking about specific components here. Timing. No. Okay, what about macro? No. What about rates? Growth rates? Win rate strong? No. Okay, let's go from the bottom up on growth. I'm not seeing anything freaky in here. Okay, Workday helped drive growth, momentum, major expansion, including global payroll, new AI-powered deployment agent, cool, pleased to report revenue growth. All these acquisitions should lead to an acceleration of organic growth. There are no real warnings here, honestly. Is the valuation just cooped up? Because I'm not seeing anything scary in here. It's not like they're like, oh gosh, everything's pooping the bed, you know? I'll try one last look here at head count. Head, strength heading into the fourth. Let's see, talking about customers, budgets going into 2026. Let me go look at that one. Okay, so we feel really good about our growth next year. 13% on subscription is solid. Okay. That's not bearish. Yeah, there's nothing bearish in this workday call, honestly. So, why would the stock be down so much then? Well, it could be, just valuation, right? I mean, let's go find out. Let's see if I go look at their valuation. Quick analysis puts us at dun 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 dun. Come on, come on, come on, come on. We have they're trading for 209 divided by 9.05. They're trading for 23 times. Honestly, this is not bad. 21.9, 15.2 plus 12.3 divided by 4. I have a growth rate of 17. So, this is actually not that bad. So let's go look at what that valuation looks like for a moment. So the way we do that is we go over to the stock tab. These are all the stocks, by the way. So far, we have analysis in the stocks tab. We try to add every day to this. Tesla, Hood, Target, Fastly, DoorDash, Costco, AMD, Nvidia, Apple, whatever, right? And so every day in our course member tab, this is in addition to the alpha report. A lot of people join for the alpha report and the trading, and then they're like, oh, I'm going to stay for the fundamental analysis too. This is really our fundamentals tab. And it's great because it just consolidates my thoughts and puts the valuation out there pretty transparently for everybody in the courses. I mean, I'm showing this to you now, obviously, but the growth rate here was 16.92. That's Wall Street's growth. Service provider. So yeah, like we just did SanDisk was the analysis we just did. Let's do Workday. Oops. Workday. There we go. And let's go see what it looks like on a valuation basis. W day. Oh, I've got a second one here. That means I doubled up. Okay. Well, let me get rid of the blue one. Wait. Oh, okay. No, that was a placeholder. Okay, cool. That's fine. There we go. W day. Perfect. Let me just see what the peg's going for. Peg's 137 right now. So, I mean, like brief look at earnings call suggests management is still looking at 13% growth next year. And, Wall Street, which is what Wall Street's looking for, which is consistent with Wall Street expectations of 12 to 13%. They, beat or raised on all estimates for earnings. Like the valuation's not bad. Nothing scary in the earnings call about layoffs or recession, but it's clear that people are worried about it, right? I think that's what it is. I think people are just, are worried that we truly are in a slow bleed, jobs environment, and Workday is basically a, way to go long shorting workers by shorting Workday, or selling it, right? So like if you want to go long job loss, I'll put it that way, that's easier. Long job loss. Shorting or selling Workday is possibly an idea, right? So kind of interesting. But yeah, I mean, broadly, I didn't see anything freaky over there. Somebody donated $10 to say PAX Group. I don't even know what that is. But hold on a sec. Let me finish this. Yeah, I mean, and then zoom out. Man, it's been stuck, huh? It's gone nowhere since, that's 2024. But we've been at these numbers in 2020. You could be 5 years flat on this company. Isn't that crazy? I mean, I think that's wild. So, PAX Group, $5 billion market cap. Anytime I see these like these candles, it's usually a meme play. Usually. But what is it? I don't even know what this is. So, PAX Group. Oh, is this in healthcare? Oh, even worse. Talk about even more memey. just a super quick look at it. This company has... PAX Group is a holding company focused on post-acute healthcare, assisted living, skilled nursing services through independently operated facilities. Oh, dude, I don't even want to know how much debt this company has. If they're running nursing homes and they're memeing, nursing homes and memeing, to me, screams debt. I could be wrong. I'm not always right. But is this them? PAX Group, Utah, Farmington, Utah. Oh, I know where that is. Got some new construction over there. PAX, Q3. Oh, well, this is not their 10Q, is it? Let me make sure I'm getting their 10Q. There we go, 10Q. Okay. PAX 10Q earnings report. And then we're going to go back to broader macro news here. Just a super quick look. All I'm going to do is I'm going to look at cash flow and the balance sheet, and I'll give you a really fast take on it. So cash flows first. Let's see what they got. So cash flows, we're burning cash. Well, no, that's not true. I got $407 million, only $40 million of depreciation. Okay, $407 million in operating cash. That's actually pretty good. Honestly, I give them that. That's pretty good. 54 million. So they get 350 mil of cash flow. They're generating about 110 mil of free cash flow every quarter. That's not bad. Well, of cash flow. Yeah, no, free cash flow. Yeah. Well, okay. All right. They are borrowing. Payments on line of credit, net cash user. Oh, no, these are payoffs. Payments on long-term debt. They actually paid off some debt. They're not issuing shares. That's pretty good. Okay. What's the balance sheet look like? So the balance sheet, I've got current assets with some prepaids in here. Call it 1.1 billion. I've got bills to pay of 1.1 billion. I've got long-term debts. Not a lot of long-term debts. Gotta give them credit. Not bad. I got a lot of bills to pay, but they got a lot of, employees probably. That's not bad. Do they make money? Look at this. Patient and resident service revenue. $1.3 billion of patient revenue. Oh, but look at the margins. It's horrible. Oh, it's such an employee-centric business. Oh, man. 6% operating margin. That's crazy. The cost of services, 1046 divided by 1344, 22 point, just call it 2%, gross margin. It's better than I thought. But, what scares me is this, booming post-COVID. Will the boom continue, right? Will the boom continue? Sometimes you see some of the post-COVID products they really run. I mean, kind of like that toilet company, the private credit company we saw. That's interesting. Anyway, okay, so what else is going on in the markets right now? We've got, so Robinhood is going up to 127. Pretty bullish movement here. Google is still in the mud, but it's staying stuck right here. Like, it's not worsening. Okay, good. Then you've got... let's see here. What is this? AMD trying to get above the flatness. NVIDIA trying to recover a little bit. Google's kind of still hanging out. Meta's a little flat. Qs are nice, 82 bips. Symbotic, holy smokes. I mean, this company has great fundamentals for ish manufacturer, because they buy, a lot of their components. We did a big analysis on Symbiotic, on their valuation, their balance sheet, cash flow, revenues. We spent quite a while on Symbotic. I always say Symbiotic. Symbotic again yesterday in the course live. And interesting, it looks like bonds are actually up. And yields, no, that's weird. The 10-year is up on yield-wise, but TLT is actually green a little bit. That's a 25-year maturity, so there's probably just a little bit of a disconnect there. Anyway, okay, that's interesting. Let's go see what the FT has today. Crypto hoarders dump tokens as shares stumble. Crypto hoarding companies are ditching their holdings to prop up their share prices. Is that true? Who's dumping? So we know Michael Saylor is down 50%, dragging down shares of copycat companies. Okay. So 77 billion have been wiped from these companies. Saylor's company is now worth less than the Bitcoin it holds. Is that true? Are they actually selling for less than NAV right now? Has it gotten that bad at MicroStrategy? 171. I mean, I know it's down an insane amount, but what's their market cap right now? 49 bill. And how much Bitcoin do they hold? Well, easy way to find out is just go to X really quick and look at one of Saylor's last. Is this true? Look at this. Vitalik just started dumping Ethereum. I wonder if that's true. We'll come right back to that. So let's just go to Saylor here, okay, with the memes. So Saylor, we've got, let's see what his latest fun is. Let's see here. I could also go to their website. Man, usually he has a recent tweet of how much they hold right now. Here we go. As of 11/16, we hold 649,000 Bitcoin. All right. So multiply that by 87,000. No, their market cap. Whoa, wait. Yeah, the value of Bitcoin, 56 billion. Oh, it is upside down. Wow. Wow, yeah, you can actually, you're getting Bitcoin at a discount right now by buying MicroStrategy. That's crazy. Somebody says Vitalik sells ETH all the time and uses it to fund other projects. Okay. Yeah, that is interesting on MicroStrategy. Okay, so the market cap lower now than the Bitcoin they actually hold. So the Financial Times is right about that. I will write that down. So we're at, 56 bill BTC versus 49 bill market cap. Somebody says, check out on House Hack with PayPal so my stock goes up. Oh, you're talking about, you want to buy the AI product for Black Friday with PayPal? I think you can do that. I do think there's a PayPal checkout for this. Just make sure you use the Black Friday coupon code because we're going to raise the price massively on the foundation membership for it at reinvest.co or househack.com, mostly because it's like as the product actually starts building out more than what we already have, because it's on just like super pre-sale right now. We're going to release the early alpha, beta version of it, if you will, in December and then go from there. But, I expect by the end of next year, it'll probably cost 5 to 10 times as much. But anyway, and we'll probably get rid of the lifetime anyway. Unless you already have the lifetime, then you keep it for life, right? Nobody's getting rug pulled. There's going to be a fire sale of these companies, and it's going to get a lot worse, says a senior researcher. It's a vicious cycle. As soon as prices start tanking, it's a race to the bottom. Investors worry the business model relied on a virtuous signal of rising crypto prices. Well, duh. Saylor Software, somebody says, do I believe JP Morgan is shorting MicroStrategy? You have to be careful. Sometimes the things that people post on the internet are like snapshots of what people who are clients of JP Morgan are doing. So it's possible that clients at JP Morgan are shorting MicroStrategy. In fact, I would guarantee it that there are clients at JP Morgan shorting MicroStrategy. And then people will look at it. Now, I'm not trying to defend what JP Morgan does. Somebody here is asking about House Hack. If I live in NL but hold BG citizenship, can I invest in House Hack? Probably. I mean, try it. Put your info in, see what happens, and the compliance people will let you know. That's their job. I don't know, my job. That's a good question. But anyway, thank you for the House Hack question. Yeah, you can still invest. You just have to. The only downside, I feel like, on our website, so I went for the giant scrolling website as opposed to 2 different pages. So like you have the reinvest AI product, but to get to the invest part, you have to like scroll halfway down now. 5% yield plus upside or whatever. Well, I don't think it's that bad because you could press the buttons, but I don't know. I don't like many different pages because I feel like it gets confusing. People are like, oh, which link do I use? You know, I'm not big fan of complicated navigations. It's kind of like the Meet Kevin app, like one app. All right, where was I? I was just looking at the FT. Oh, yeah, here. Right. So anyway, yeah, I mean, I don't like JP Morgan. So I'd love to dump on JP Morgan. Yeah, the Benner cycle. I know. Like that is a weird one. It is very uncanny. And sometimes like it's not because the Benner cycle is right, but it's rather because people think it's right and then it sort of self-fulfills, right? It's weird. What's the difference between AI beta access and lifetime access? Well, one, you only get access for 2 years. So I guess this should really say lifetime beta, 2-year beta. And maybe I'll just get rid of the word beta here. 2-year access. Yeah, you know what? I'll just get rid of the word beta there. That's a good idea. But yeah, I mean, look, JP Morgan, there's been a lot of drama about this idea of JP Morgan, trying to like crush MicroStrategy because they put out the note about them maybe getting kicked out of the MSCI. And so, look, I'm the biggest fan of wanting to dump on JP Morgan. I just haven't seen like a really good, and maybe I'm just missing it, smoking gun yet. And maybe I'm just missing that. 2-year access. Yeah, I guess that would clear that up. I agree with that. I think that's better wording. 2-year access. Yeah, I like that better. All current and future features included for 2 years. Renews tentatively after beta after 2 years. I'll say after 2 years. After 2 years, will not automatically charge you. Okay, there we go. Cool. Publish. Okay, cool. I updated that a little bit. No fees ever. Access for life. Cool. Publish. There we go. That evens that out a little bit. I think that's a fair question. I appreciate you with that feedback. I wouldn't have thought about it until you said it. So thanks for that. So Sailor's business included film production, vaping, electric vehicles. After its pivot to Bitcoin treasury strategy, drove a huge increase in share price. Inspired a raft of copycats, including film production, vaping, and EVs. Yeah. To own Bitcoin as a try. Okay, yeah. That makes more sense. I'm like, I don't recall Michael Saylor doing those things. I misread that. But anyway, shares in Meta Planet have plunged 80% since their peak. It's inevitable. Several companies have begun selling their crypto stockpiles in an effort to buy back stock. Crypto prices drop. Bitcoin and Ether sellers can find buyers. Companies with more niche tokens find it difficult to raise money. When you've got a medical device company buying some long tail asset in crypto, a niche market, it's not going to end well. 95% of these digital asset treasuries will go to zero. Volatility is Satoshi's gift to the faithful, he said. He's such a good salesman. Let's see what the comments are on this. Crypto bought on leverage, now being sold to fund share buybacks that do nothing but hold crypto. What a time to be alive. Yeah. Okay. This time is different. Nice. I mean, who could have seen this coming? Okay. Right. All right. What else? I got a little pop there in Bitcoin right now. Bitcoin's up like $400. So Dave & Buster's keeps cranking, baby. In our alpha report this morning, we talked about these consumer names, and specifically all of these right here. But Dave & Buster's has been an interesting one because it's now on its 4th day of rising. and it's come off massively, right? So people are seeing this as like a cheap little play over here. I wonder how Six Flags is doing right now, because that's been another one. Yeah, see, Six Flags as well, another nice green day. 3% over here. Google, okay, Google's slowly recovering. Okay, that's good. That'll push the Qs. And we're slowly getting to 617 here. I think we can make it there by the end of the day. I don't think we have bad news, honestly, between now and like the first week of December. There's no bad news. You know, there's nothing really scary to talk about. Yeah, you've got a little bit of these private credit issues, but that'll be something that you see for a while. Okay, what else? Russia says U.S. envoy Vitkov to visit Moscow for talks. That's cool. Hong Kong tower fire kills 13. All right, U.S. stocks climb out on rate cut optimism. Yes, because of the hassett thing as well. That's the bullishness right now. You just don't have bad caddies right now. I mean, I don't think anyone really cares about the Chicago. Let me see. Chicago PMI came out this morning. Let's see here. Chicago. Presser. Well, what the hell? Chicago. I thought we had the Chicago report this morning. Chicago PMI. PMI report. Chicago PMI. Should be this. Is the report just not out? Where's the press release? News? ISM? Maybe it's one of these. Chicago. Where's today's date? All right. I really want to know what this is. I want to date this crap. Let me go look. Stand by for not the closing bell. United States. Okay. Chicago PMI. Business Barometer Index. Okay, let me write this correctly then. Chicago Business Barometer Index, 36.3, lowest since May of 2024. Okay, why is it so hard to get it on their website? I just don't, maybe they just haven't updated it yet. Yeah, because it's just their website. And I only have the press release from October here. Yeah. All right, whatever. So I'll just look at it on the journal then. Fine then. Business activity in the Chicago area, which, you know, they obviously argue that, oh, well, we're a leading indicator. You know, that's what they say for the whole U.S. economy. Driven by declines in orders, production, and employment. Tumbled to 36.3. Economists were expecting 45.5. This is the slowest since May of 24. Firmly before the 50 mark, dividing contraction from an expansion. The drop in November was largely driven by a fall in order backlog, which hit its lowest level since March of 2009. March of 2009, by the way, was the bottom. New orders and production also declined, while a fall in index inventories almost completely offset the rise in October. Right. Let me see if the analyst notes on this, because I'd love to actually get the very report, but it's just still not out yet. Yeah. All right. Faster pace signaling contraction, prices paid at a faster pace, rose at a faster pace. New orders fell. Employment fell. Oh, and employment fell. Why do they not mention that in some of these articles? I don't understand that sometimes. It blows my mind. But because I feel like that's a critical detail. Chicago M&I business barometer. Okay, it says employment fell at a faster pace. Backlog of orders worst since March of 2009. Let me fact check. That's what it said. Lowest since March of 2009. Okay. And index overall down to May of 2024. Seen as leading indicator. I still maintain that we had a lot of inventory building during tariff disaster taco. Could this be normalizing that inventory, right? Same thing with retail sales. Like you see that slowdown in retail sales, but it's like, well, how much did everybody like go shopping, right? Who knows? Sunday says Duolingo. I feel like we just did an analysis on Duolingo. It's up 8% today. It's come down. Yeah, look at that. It's come down quite a bit. In the, pretty sure on the stock tab, I have a Duolingo. Yeah. So this is, I think, why people also like the Alpha Report. I'm just going to show this to you, okay? I'm giving this away for free right here. But I literally just on the iPad, you asked about Duolingo. I go over here, I put in the ticker Duo, and this is what it looks like for course members. This was our last, it's not all of it, but this was our last analysis on it. And I go, amazing balance sheet, no debt, 93 million per quarter of free cash flow, very good. Earnings grew at 40%. Clearly they have pricing power with NVIDIA level margins at 72%. It's fallen closer to its fair valuation. You know, the concern is really just that AI is going to kill their momentum. And then I get into sort of like the 2x2 balance sheet. But yeah, I mean, not bad. You know, a lot of stocks have come down quite a lot. And it almost makes you wonder, like, where are the buy the dip opportunities? I did a little bit of buying the dip last week. But yeah, wow, nice little bounce today. And you're seeing this at a lot of different companies. I feel like you're getting breadth coming back into the market, which is good. That should actually be reflected in the CNN Greed and Fear Index, and it should be going up again. So to less extreme fear. Yep, that's right. We're at 19 now. And watch breadth will be going up, I bet. Yeah. See that U-turn right there on breadth? That's good. And you know, if that keeps going, it's going to be bullish, which is good. So, but like I say, I don't really see big catalysts to the downside. I mean, yeah, you still have my little canary bird over here. Just, you know, on the last 2 days here. Okay. So let's now look at, okay, what do we have here? We've got Trump account, Supreme Court, China, Gnome, international tourists, blah, blah, blah. Let's go to the information. Let's see what they have for us today. They sometimes have fun stuff. Trump family crypto deal runs aground. All 5 is a scam. They're going to 0. Okay. So what do they say? Rang the bell in August. Alt 5, we're gonna change finance forever. Yeah, dude, the stock's going bankrupt, man. This is a liquidity play for World Liberty Financial. That's all it is. It's a scam. Sorry, that's my opinion. Don't sue me, bro, but I think it's a scam. Alt 5 offices are in Montreal and Toronto. That is an insult to Canadians. Okay, let's see. World Liberty Financial. Let's see here. Live streamed a flashy event, blah, blah, blah. Troubles with the combined company quickly surfaced. Alt5 suspended its CEO, pending an investigation by a new law firm. The company warned staff it would likely face litigation and regulatory investigations. Alt5 shares are down 75%. Dude, I dumped on this when it was $8. It's under $2 now. World Liberty Financial is still falling. Of course, because they're liquidating. The Trump family and the Trump cronies are all liquidating, and the Alt5 shareholders are helping pay for it, because the Alt5 is supposed to be a WLFI like treasury company, which is just like, it's legit the perfect way to scam older investors who watch Fox News, and they're like, honey, the Trump's sons, they got this crypto opportunity. They're gonna revolutionize finance. Honey, let's put some money into it. And they don't realize that all that's happening is the money's literally going from the old folk, MAGA folk pockets directly into Alt5 stock, which is being dumped by insiders so they can raise money and buy World Liberty Financial, which we all know is going down. But you need buyers for World Liberty Financial so the Trump cronies can cash out. They want to cash out because they make the big dollars. So you've now basically, you do your Fox News circuit or circus tour. So all the old folk can go invest and get ripped off. And so you literally just move money from the Trump voter, tried and true, red, white, and blue, baby, 4547. And you move it from their pocket to Trump's pocket, all via a fully disclosed scam called Alt5 that gets promoted by the Trump sons. That's all. Why is the stock going down? Why are we losing so much money? Oh, I don't know, honey. Maybe, they say we should just buy the dip. Maybe we should just buy more. It can't go to zero, can it? It's in Sears, it's crypto. Bad. Anyway, welcome to Exit Liquidity. So, Alt5 told its staff on September 4th, without providing any explanation about the suspension of its CEO, it didn't publicly disclose the suspension. Trump and World Liberty Financial wouldn't comment on the share price declines. Recent personnel changes at Sigma 5 reflect ongoing effort by Alt5 leadership to ensure the company has appropriate operating team in place. Okay, got it. I feel betrayed, honey. I've been stonewalled. I've been trying to find out what the company's plans are, but I don't understand. I've been betrayed. No, you dumbass. Did you read the financials to know what the whole intention of this was? Well, I don't read financials. I just saw Eric on Fox News. Well, there you go. You got scammed, homie G's. Alt5 deal is comprised of two parts. Alt5 Sigma shares and warrants to World Liberty Financial. At the same time, Alt Sigma 5 sold 100 million of its shares, raising $750 million. Yeah, exactly. So they could go buy World Liberty Financial crypto token. The company said it would use money to buy more World Liberty Financial token at the open market. The arrangement gave World Liberty Financial a public stock listing and exit liquidity. The Trump family was aiming to profit from investor enthusiasm. No shit. We know. But honey, you mean to say Trump scammed us? Yes. Transactions like these are done between private companies like World Liberty Financial and shell companies that have stock listings but no operating business. Alt5 Sigma did have an operating business, and troubles are complicating the deal. Founded by Canadian entrepreneurs, Alt5 built a trading platform and payment system that allowed customers to buy and sell crypto. Okay, you have to remember, when I did my Alt5 video, Trump scam Alt5 meet Kevin, you have to look at this. This is wild. Is that literally what I say? I say this is crazy, okay. So this was my video when I dumped on them the last time. This is literally a company that started as a crypto mining scam in 2019, but that failed. Okay, so the crypto mining scam failed in 2019 because of a storm that happened on Halloween in 2020. They tried doing some health insurance ploy, which I wonder if it was a scam. Then they got into the energy upgrade scam by doing appliance recycling in Canada. Then they applied for a crypto exchange license in Lithuania, and then they got into a biotech scam. Now, it's my opinion that those were all scams because they were a failure. But I kid you not, it is literally on page 1. Look, part 1, item 1, business, highlight. In your face, they bluntly describe how they failed at every single thing that they've done. What about honey? What do you mean it's failing? What? Sad. Part of the deal, co-founder, the son of President Trump's Middle East envoy, Steve Witkoff, was appointed as Alt5's chair. Right, because Zach Witkoff knows how to run a business. He said the deal would boost Alt5 Sigma's original business by allowing it to issue cryptocurrencies that customers could use to make purchases. Oh, right. Incredible company with incredible technology, said Witkoff. It's a full scam. But Alt5's bet on Trump's cryptocurrency turned out to be awful. The company's stock is now more closely tied to a cryptocurrency than an original business. Well, this is what I said when it was $8. I'm like, guys, this is going to go to zero. I mean, if you go look at my Alt5, the support line that I have for Alt5, Alt-S is what it's actually listed for. If you go look at my support line for it, it's right here at 0. And this is when I was dumping on it. I'm like, guys, get out of this. It's going to go down. It's a scam. Oh, what are you going to do? What are you going to do? September 9th. Yeah. It's like $7. What was it? $7 and what, 35 cents? It's crazy, straight down. Anyway, okay, keep going on here with the, what do we got here? Chipman, the Alt5 investor, hopes the situation was improved. I hope it wasn't just a money grab for the Trump family. This has been a nightmare the last 3 months. You're dumb. You got scammed because you didn't read the documents. So steered Alt5 into orbit. First chartered bank to open, blah, blah, blah. Scam. New board of directors, then the Trumps left, and then it's like, what's going on? The discussions didn't pan out, blah, blah, blah. World Liberty website says the Trump family owns 22.5 billion WLFI tokens and is entitled to receive 75% of the proceeds. The cryptocurrency was priced at 20 cents per token on the completion of the deal. Since then, they've dropped to 11 cents, but it has recovered to 16 cents. The roller coaster began since the merger, rallied from $9 a share to $20 a share, and now it's, less than $2 a share. Eric is not on the board, nor has he ever been on the board. Right, but he was talking about joining the board, and then they U-turned when the stock started falling so that they could distance themselves from it. Somebody leaves a comment. I'm absolutely shocked. A family who couldn't make money running a casino is having issues making money in crypto. My faith in capitalism is gone. The irony of this is, dear John, Trump is making a killing from WLFI crypto. Let me correct your statement. Investors in Trump's Alt5 and WFI aren't making money. Trump and his allies are making a killing from WFI crypto. Let me correct your statement. Investors in Trump's Alt5 and WFI aren't making money. Yes, I'll show him. Wait. Like. Yes, I got a like. Yes. All right. Fixed. All right, so where were we? All right. Oh, well, the crypto winter will this time be different. Trump's AI project. Elon Musk says Tesla to double down on robotaxis. Let's take a look at that. Altman forecasts rough vibes. We saw that already. Wasn't there another Altman piece in here somewhere? Whatever. Oh yeah, and the Halo mask. Those things are cool. I want one so bad, but I can't bring myself to buy it. So Elon Musk says Tesla to double number of robotaxis in Austin. Okay. On X should roughly double next month. So we're gonna go from like 27 to like 50 or something. That'd be cool. Uh-oh. Hold on. I just see a Nick T tweet here. What's going on? Yeah, repo's getting usage again. What is this? Okay, we'll look at that in just a moment. What am I trying to do? Nick T. Come on, baby. You know what I need is I need coffee. What mug do we have today, boys and girls? Oh! Minimalist Capitalist says, people don't realize how hard running a casino in Vegas actually it is. It is extremely competitive. But Trump didn't run those casinos in Vegas. He ran them in Atlantic City. Oh, but that's what I meant. Sorry. I apologize. Repo facility is getting its first real test. The idea is simple. Problem, institutions are reluctant to use it. In September, they should discourage routine use. Repo rates are firming again. Tightening in funding markets is coming. Oh, you know what I totally forgot to use during the Trump piece there. I totally forgot this. I made this into a button.
Corruption is not bad. Corruption is only bad if I'm not involved.
Sorry. Federal Reserve is struggling to persuade banks to use its lending tool. Oh, it's not even written by Nick T. A recent private where the federal facility would carry a stigma. The facility, blah, blah, blah. Repo rates, fine. Fed's recent decision to stop reducing blah, blah, I don't know. Let's see. Okay. This month, Williams met privately on the emergency meeting. At the meeting, some bank officials said they were worried about borrowing from the standing repo facility would carry a stigma. Right. It's sometimes used by banks that are facing a crisis. Right. Let me see this here. That one's priceless. Yeah, I like that one. I think that one's a good little button. So I have that one ready. I could just push it whenever on. Oh, by the way, shout out to those of you joining the. Oh, seriously, wow. Thank you guys. This is actually really incredible. Shout out to those of you joining the foundation membership here on the House Hack AI. I mean, really, you're putting a lot of faith in me and the company, and I just want you to know I'm grateful for that, and we won't let you down. But shout out really quick, Steve, Robert, Gray, Christopher Marks. That's a cool middle name. Paul, Lauren. We got a Lauren. Let's go. We got a girl. Bryce, Mauricio, James, Craig, Todd, Flavio, Miguel, Ralph. Let's go. That was all just within the last little bit here. Less than like 100 minutes. So thank you. I appreciate y'all. Anyway, where were we? If you haven't seen that yet, you can go to househack.com. We got the little Black Friday thing going. So we're raise the price a lot after Black Friday. We just want to get people in early. Best case scenario, we IPO that puppy and you guys got foundation membership forever. All right, Michelle Bowman suggested during a talk that the borrowing program should charge a higher interest rate to deter use. Okay, cool. The policy meeting. There's nothing in this. This is boring. It's tough trying to set the price of money while trying to look like you're not trying to set the price of money. They're going to stop letting the enormous balance sheet decline. That means more liquidity. Less stress on repo. Upshot will be more inflation. If not at the consumer goods level, then at assets like real estate, stocks, and investments. I mean, that's good, right? Like think about the bullish catalysts right now. So first of all, let's think about bearish catalysts, right? Bearish catalysts, you've got ADP DEES-3 for November. You've got ADP DEES-9 weekly for week. Okay, then I've got, I mean, that's really it, No earnings until January. Okay, so now you have bullish catalysts. No earnings until January. You've got Fed likely to cut DEES-10. You've got, though hawkish commentary is a risk after DEES-10, on and after. And then, I mean, what else? You're not getting, no October CPI, GDP, or jobs. That's bullish. You get delayed jobs report to after DEES-10. In my opinion, IMO, there's a shot at new all-time highs by DEES-9. It's possible. And then you've got the liquidity ending, liquidity constraints and DEES-1 at Fed. So that could help maybe the banking and private credit poopy doopy. Yeah, actually, did the S&P just jump on the 100? Let me see. So you've got, you got 100 DMA bounce on SPY, and I think you have that on the Qs as well. And you have widening breadth. We're total, 100 DMA bounce. 100 DMA bounce, SPY, QQQ. I've got, 595, only briefly lost on Qs. It's a great opportunity to diversify, honestly. Great opportunity to diversify. Consumer stocks in soft landing. You've got house hack. I don't know, whatever you want. Cash, debt payoff, whatever, right? Okay, so let me see here. Looks like we're going pretty much straight up to 617 right now. That's exciting. Is Google's still down 1%? But it's the broader market moving, those consumer stocks moving. Yeah, the Ukraine piece, you're right. I have my doubts for it, but I have my doubts on Putin's sincerity for peace, but probably won't be realized until DEES-9 anyway, or after. So that's good. That's good. Yeah. All right. maybe that'll create a nice crypto bounce. 52 here. Crypto crypto might be in an anti-treasury meme phase, not a fundamental indicator. Alt 5, for example, is a straight idiosyncratic scam IMO, right? That's just my opinion on it. Did I spell that wrong? I forgot the I. Idio. How is it still wrong? Idiosyncratic. It's not. Yeah. I don't like using the buttons where it changes it for me because I want to know what I did wrong. Otherwise, you'll never learn. A little hack, by the way. Home builders sniffed out the hassett rally. Yeah, the hassett rally. Let's go. Let's see, Lennar. Yeah, nice pop there on Lennar, huh? Okay, so Elon Musk to double robotaxis. Tesla, let's see here. Tesla has consistently walked back robotaxi targets this year. Yeah, we know. What is this? Lessons from Los Altos. I can't do foreign affairs on a live stream. Everybody's gonna leave. It's too dry. Trump opens the door to Obamacare subsidy expansion. That's not a surprise. Also not a surprise, it's a footnote over there. Hong Kong blaze, 13 dead. Jeez, sad. Let's go to Russia quiet on Ukraine peace as ground forces make... Yeah, I mean, I think the whole Russia thing is just a ploy to get Putin more time. Old news. When is Kevin getting rid of the lifetime membership? Well, I mean, it depends what you're asking for. Let me just quickly answer that. So if you're talking about the lifetime membership at Meet Kevin, we also have a Black Friday sale there, mind you. And you get the new course, Reinvest totally for free. It comes with it. So there's a Reinvest course that's in addition to all the other 8 courses. So you get all 9 courses, trade alerts, top 10 stocks to buy, every private live stream, every alpha report, the stocks tab. Like, that's at meetkevin.com. So the Black Friday sale's live on that as well. That lifetime membership isn't going anywhere. So, that stays. The Reinvest lifetime membership, that won't last because we're going to change this. Once the product is done, towards the end of next year, we're going to charge monthly for it because we think it'll be worth $199 to $299 a month because we think the product's gonna be amazing. Maybe even more than that. I mean, we were thinking about maybe doing like a join fee and then a monthly fee. We don't know yet, but I think it'll average out. Well, I know it'll average out to a lot more than what it is now, but we'll see. Okay, so AliExpress, it's Chinese sex doll seller after Reuters examination. That's how you know it's a busy news day, folks. AliExpress is getting banned. or a Chinese sex doll seller is getting banned. All right, what do we got over here? JP Morgan Private Bank has a bull case for S&P up 20% by 2027. And then Fortress to sell Caribbean hotels in muni bond deal. Okay. Let's go see this. Okay, S&P... I mean, keep in mind, they're biased in the sense that they want to keep clients. But they think the tailwinds are strong enough for the S&P 500 to get to 8,200 on the S&P 500. The bank favors technology. Oh, we read this. We went through this whole JP Morgan piece. I remember that because we have the whole... we went through that whole institutional piece. This is just old news now. That was JP Morgan. I don't remember where I had it. That's weird. JP Morgan. Maybe I titled it weird. Whatever. We did a whole piece on it. Well, I thought it was actually very interesting. It was probably last week sometime we did it. And it was this whole You know, the whole booklet, I already did a video on it. So, but yeah, JP Morgan Outlook. Oh, I think that's it. JP Morgan 2026 Outlook. I think I found it. Let's go. Yeah, it was this. Outlook 2026, right? And they thought they were excited about, you know, cash positioning, AI, the new paradigms, the sales pitch, real estate, you know, the components of AI, right? Like, this is the piece that we went through. Did they say 2027 in this piece? Is this the same one? No, but 27 isn't mentioned in here. I wonder if that's just a desk sort of like leaning on this JPM report. Okay, cool. So, and you could almost call what's going on like some form of plunge protection here. All right. Let's go. Journal. Georgia prosecutor to drop election interference case against Trump. Traders were flocking the market with risky bets. Robinhood's CEO is their cult hero. That's interesting, how he went from Vlad the Impaler to hero. It really is possible to spend too much on AI. Tech giants are betting they won't end up being like Intel by over-investing in compute. Chip factories cost billions. Blah, 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 blah. Over-investing. I mean, we already know this, that this is the concern. Leveraged up over-investing. Old news. Okay, so we got the JP Morgan piece. We got the repo facility. We've got liquidity comment here. Liquidity comment here. I've got the 10-2 is stable. I got nothing on Axios, Reuters, BBC, Politico, Washington Post. Trump wants a bigger White House ballroom. His architect disagrees. Whatever. The Information, that had the Alt5 scam piece, which we've known about since before it crashed. What good does it do after it crashed? Okay. Then we've got the JP Morgan piece here. Okay, let me see. Oh, the Chicago MNI. Let's see if that actually came out yet. Because that was interesting too. Oh. Not out yet. Losers. Why? Okay, I fixed that. MicroStrategy, we know. We looked at PAX. Somebody donated $10 for me to look at PAX. That was nice of them. Believe low payment rate, defaults into 26 on private credit. We saw that. The crypto dump in the Financial Times. Okay, I'll just clean this crap up. Okay, that was from the course member live stream. Okay, cool. Clean that up. Your video was impressive that you made yesterday? Which one? I made 2 videos yesterday. I hope you like my real estate video. I actually don't think that the YouTube algorithm really promotes real estate videos to people. But I really enjoyed the real estate video yesterday. And hopefully a lot of people really really enjoy it too. And you learn something. You know, I try to point out lessons anywhere I can. Okay, let's go look and see if institutions have any SH9T talk. You know, sometimes you look at the institutions. Man, somebody said that real estate video of the remodels. I thought you wrote the video of the models, and then I got really excited. Freaking real estate remodels. I want videos of models. All right. So, hassett emerges as front runner. JPM, S&T, Bitcoin slide, 5 factors behind the decline, and what's next? Now that's a sexy title. Let's go look. Oops. 5 key factors behind the decline, and what's next? What is that? Oh, tell me. So, 5 factors. A broad drop in equities and risk sentiment. Hawkish turn in monetary policy, but that's flipped. Flipped temporarily. D10. Bigger is this. Bigger and bigger. Risk off sentiment, equity correlation. Bitcoin has behaved more like a high growth tech stock, right? Correlations between crypto, Bitcoin, S&P 500, NASDAQ, yes. Okay. Uncertainty about whether the Fed will continue. Okay, this is institutional outflows, right? Whether it's profit taking or what, but this is like this is its largest, the largest ETF sell-off it's had to go through. So I think some of this, like, you just don't have. It's like kind of like a virgin to the dip, you know. So like IBIT hasn't gone through a 30% Bitcoin decline. I'm still out of coffee. All right, let's see what here is. Spate of data released Tuesday morning. Confirming economy slowing down. Strength was mostly related to tariff pull forward. Weak September corporate tax payments hinted at that. Myron told us that all along, the continuing downshifts in consumer sentiment, notability for job availability. To be clear, the economy is knocked down, but as I noted in the summer, forget the mathematics. A sustained weak unemployment and eventual weak spending, in turn, risks kicking off a downward cycle slowly at first, then all at once. Yeah, and that's why I think, like, you can have a tactical all-time high rally still. Tactical rally now is my opinion. But yes, the slow bleed continues, right? Continue! It's like when you die in Super Smash Brothers. Continue! I never believed that the Fed funds back down. Okay, but Fed Governor Waller daily leaning to cut. It's difficult to see how Powell corrals enough voters to keep from cutting. When markets price 80% certainty for the cut, they're loath to hawkish surprise. Beige Book released today. Nobody cares about the Beige Book. ASML, I think ASML is great, until AI rolls over, obviously. Sir Mr. Jason donates $10. Kevin, I gotta congratulate you as a business owner and as a father. You have the ability to actually earn a really good income and be there for your kids' life. Truly blessed. Oh, well, thank you for that. Appreciate that. Yeah, we feel fortunate, so thank you for saying that. Always good to reflect on the wins in life. I think we spend so much time thinking about what we did wrong or regrets or whatever. Like, you got to think about what you have. Okay, debate to cut now, hand wringing, blah, blah, blah. But perhaps this is not the fate. It depends. Okay, the inflation question, blah, blah, blah. Looking to 26, blah, blah, blah. Against the administration's policy responses, Bessent wants a simpler Fed, and he'll get what he wants when hassett is installed. Keep in mind, Trump could very well lose House speakership. Republican majority would be too thin to really do anything, but that's actually usually a benefit. Stalemate in Congress, usually bullish. Let's see here. September weakness in discretionary spending largely reflects the ebb and flow of the pull forward. I mean, it's probably true. That would be bullish, along with claims this morning that were bullish, like claims this morning. Lowest since since April. Liberation. Spending volatility, slower margin growth, lower wages. First, the drop in margin growth, as evidenced by September PPI. This is small PP. So, PP is shrinking.
Little PP.
So that's obviously a risk factor for corporations. Yeah, wage growth is heading towards 0. Drop in income expectations. We wait for jolts. Whatever. A crossover in jobs assessment, hard versus plentiful, is a recession. Economy is moving closer, but not there now. And the hope is that easing prevents it. Yes. Yes, correct. Yeah, I like this guy's pieces. I think he usually does a good job. Okay. Cool. Almost to my line. Get me to my line. This honestly will be a big test, though, because, I mean, the market's closed tomorrow. So, it's going to be hard to say. But, really to get to all-time highs, you gotta break through 617. Gotta. All right. What else? Let's see here. And then we'll do a little summary here. Okay. Quiet. I mean, it's probably a good thing. Let me go to New York Times. Judge dismisses Georgia case. Caribbean islands. Signs of fatigue. Trump faces realities. Whatever. Nuclear arms chief warns. Leaks. Whatever. I'll look at that in a little bit. The apartment fire. That's very sad. All these bombings of these things is always very interesting. Yeah, market's closed tomorrow. Kevin, we have reached any line for a dump. Well, we'll see. Okay, let's do a little bit of a sum here. Let's just make sure everything's cooking okay. And then we're going to summarize all of the entertainment that we've been talking about for the last, 2 hours or whatever I've been streaming. Okay, make sure everybody's alive. Okay, good. Looks like we're up on... Emails are good. That's fixed. No contractors freaking out. That's always a good way to start. Okay, we're looking good. Oh, a few more of y'all just joined. Damn, a few more of y'all just joined. We got shout out. Thomas just joined Reinvest AI Lifetime Access. Just seconds ago, it says. A few seconds ago, Thomas joined. Marshall joined. Benjamin joined. Ashford joined the Meet Kevin membership 11 minutes ago. Gonzala joined Reinvest AI. Meet Kevin, joined Reinvest AI. Steve joined Reinvest AI. Welcome. Thank you for joining. Yeah, I mean it's always a little confusing because there are two things going on. It's like the Meet Kevin membership has the Black Friday sale and the new course coming out. That's free for all existing members, right? And then the Reinvest AI, is out there. And then you can also invest in house, if you want not a solicitation, read disclosure. But yeah, I mean, it's a lot. Sorry, I'll try to keep it all straight. But anyway, let's go through some of the juice. All right. Will the Kevin Hassett rally continue, or are we going to tank? In this, I'm going to give my prediction on timeframes and dates that you want to pay attention to, especially if you think we can get a bullish all-time high. I'm going to point out exactly when I think that could happen. We're going to go through the catalyst. But first, what actually kept the market booming this morning or got us to boom this morning? A couple things. Number one, we just had the best unemployment weekly claims numbers since April, which is bullish, but that's also a really lagging indicator, so it's really more of like a short-term bullish element. Second, we got Kevin Hassett yesterday. He's pretty much going to be the tool that right now Trump is using to pump up the stock market. It's sort of like the plunge protection team is back. Oh, 3 weeks of a stock market sell-off? All right, release some good news. Kevin Hassett. And then immediately it turns into, oh, well, everybody's going to cut rates. I mean, everybody wants rates to come down. And people naturally see rates coming down as being bullish. I mean, frankly, the Wall Street Journal has this large piece about the Fed's tool for calming short-term funding markets. Part of that is because we're starting to see some of that repo stress again. You saw that not just today up at $4 billion, but also yesterday at $2.75 billion. Those are just on treasuries, $7.8 billion and $10 billion on MBSs. So you can see a little bit of a pop-off on the right over here on repo, but people think this is going to relax come December 1st. So even though this could be a little bearish, people think that bearishness will go away soon. And really, the bottom line that people think is actually really epitomized by one of these top comments in this Wall Street Journal article, which is this guy right here. Steven writes, the upshot of all of this new liquidity we could get December 1st as the Fed stops vacuuming up money from the economy because they're going to stop quantitative tightening is potentially more inflation, but if not, then at the consumer level with assets like real estate stocks and AI investments. In other words, stonks up, real estate up because rates down and more liquidity. I think that's a really good summary of what people think about December 1st coming up and Kevin Hassett. So you have to think we have some really good
bullish catalyst.
Yeah, bullish catalysts right now, and we don't really have a lot of bearish catalysts. Look, here's the menu of them, okay? Now, keep in mind that while we have this menu, I want you to write down a couple dates, and we're gonna go through this list of dates. We also, tomorrow the stock market is closed, so start with that. Tomorrow's Thanksgiving. Happy Thanksgiving. I wish you the best on Thanksgiving. I hope you have a great time with family. I'll probably do a little live stream just in case you're lonely and want to hang out a little bit. We'll do a little hangout tomorrow. But anyway, Thanksgiving, the market is closed tomorrow. Friday, you have a half day. Friday is Black Friday. We already have our Black Friday sale for the house hack artificial intelligence called Reinvest AI. We just announced it. You can see the video on my channel, or you can check it out at househack.com or reinvest.co. It's the same company. You could get our AI or you can invest. Read the offering circular. And we also have the Black Friday sale for all 9 courses now over at the Meet Kevin membership. You get the new Reinvest course as well. That's at meetkevin.com. So those are Friday catalysts. But here are the next catalysts. So the bearish catalysts we have, really, there are only 2. I've got ADP December 3rd. That's going to be the full month of November. And then I've got the ADP weekly set for December 9th. Remember that we just had evidence that the slow bleed is continuing. Now, in the Meet Kevin membership, I update the bear bull scale pretty regularly. And what I wrote this morning is that nothing's really changed on my bear bull scale right here. I'm at a 5.0 on the bear bull scale. And we're really 50-50 on recession, right? You know, I think I want to be transparent with my biases. I think for IPOing HouseHack, I really don't want a recession because I think I can IPO sooner if there's no recession. Duh, that's obvious, right? But look at the bullishness that you have going into next year. You get the hassett cuts, you get the tax benefits of the big beautiful bill really taking effect next year, fiscal stimulus, maybe you even get stimulus checks. You know, the downside is the slow bleed on jobs. And that's what we're seeing with the ADP data set. ADP data set showing us weekly data moving down to negative 13,500 isn't great. Now, JP Morgan is bullish and they've got this S&P up 20% by 27 bull target. The reason they're bullish is mostly outlined by their 2026 JP Morgan playbook. And a lot of the things that I just summarized, not including hassett, but including rate cuts and fiscal stimulus or whatever, are in this outlook. Now, we've gone through this outlook before. I'll give you just like a quick little sampling of it because I don't want to sound redundant, but I do think like recalling some of it is useful. JP Morgan actually sees a lot of clients holding more cash right now than they did before the pandemic. And I wrote down that this is actually contrarian bullish. It's kind of like this morning I was talking in the Alpha report about how, hey, consumer stocks right now are on now their 4th day of rallying. Well, you know, obviously we didn't know that this morning when the market was opening. We thought they might be on their 4th day of rallying. So think like Dave & Buster's, Target, Fun, Chipotle, Cheesecake, Red Robin. Like some of these stocks have absolutely been killing it. And we've been watching and talking about it every day because we've been watching the collapse. And now we're at this little round out. Some people are like, oh, this is just a trap. But understand the bullish catalysts. The bullish catalysts are potentially what JP Morgan is saying here with cash. This idea that yes, maybe artificial intelligence progress might be stalling, which is my take, but their belief is that, you know, right now investment is contributing massively to to GDP growth. And this is great because it keeps GDP propped up until, of course, artificial intelligence U-turns. And this is where I have to be a little like cautious with like what I'm saying here, because I'm not saying we could be blindly bullish. Yes, JP Morgan has some reasons to be bullish, but what I call this right now is a tactical rally now that could potentially get us to new highs, but the risk is the slow bleed continues. Now, why does that make sense? Because look at my list of caddies right here. So these bearish catalysts are not until December 3rd and December 9th. And really, like, ADP data usually isn't enough to move the market. Look at the bullish catalysts we have right now all the way through December 10th. No earnings until January, okay? So it's hard to get bad news. We're pretty much done with earnings. We just had John Deere, Hewlett-Packard, Dell, NVIDIA. You know, we had a lot of our earnings. The Fed is likely to cut December 10th. When we went hawkish with Powell, the market sold off for 3 weeks. Now we are actually expecting the cut for December 10th. That's bullish catalyst. No October CPI GDP jobs data. Now that's bad in the long term as an economist or, you know, a macro analyst, it's bad. But in the short term, monkey see no evil, short term bullish. We get a delayed jobs report after December 10th. We get liquidity constraints ending December 1st at the Fed. That's Cyber Monday. In my opinion, there's a shot at all-time highs by December 9th. So I actually think you have rally mode between now and December 9th, and I think the consumer stocks could join with that. Now, mind you, in greed and fear, the reason I say consumer stocks are part of this is because look, and I'm seeing this, breadth is rising. Where's breadth? Right here. Stock market breadth. Look at the U-turn that we're seeing right here. Now, could it be a trap? Could we fall off the cliff again? Of course. But breadth has gotten so low, which is the number of stocks rising versus declining, right? It's gotten so low that it makes sense we're seeing a reversal. Again, Six Flags up again, 3%. Look at this. Look at these on like an hour chart. These have been straight down for a while on a day chart, on a week chart, but on an hour stock, the last 4 days, Six Flags up, Robinhood bouncing, Chipotle bouncing, Target bouncing, Red Robin bouncing, Dave & Buster's bouncing, right? This is increasing breadth. We're seeing a recovery form, which is good. You know, AMD regained 200. That's a critical line in our alpha report. You've got CoreWeave. CoreWeave has to be above the 69 line. I mean, CoreWeave is barely. You know, it's not recovering as well. Like, I'm not making long bets on CoreWeave. I think this will be a bag holder stock in the future, and it will be part of the artificial intelligence downfall of the future. But the 68.47 line here, this is great that we're holding it. Short-term bullish, longer term, doesn't really tell us much, right? So breadth, great. Liquidity, great. Go back to the catalysts over here. You got a 100-day moving average bounce on the S&P 500 and the NASDAQ 100. 595 was maintained on the Qs, and I actually think this is a great opportunity to diversify. I think you have between now and December 9th, you know, I'm not saying like get out before December 9th, but I think you have a critical opportunity between now and December 9th to ask yourself, Okay, do I want to diversify from some stocks that I have a really big allocation in, I have a lot of big profits in, and do I want to diversify those into, if I'm convinced there's going to be a soft landing, into some consumer stocks? Or maybe you like some of the stocks on the Meet Kevin top 10 stocks to buy for the next 10 years list. That's not personalized financial advice. It's just a way of saying that when you get these tactical bounces, there's an opportunity to do a few things. You can bet on a soft landing. You could pay off debt. You could pay off margin. You could raise cash for a new dip. You could invest in hassett and earn 5%. And all the upside in the stock. Read the details at hassett.com, the offering circular. This video is not a solicitation. There's risk with every investment. You know that. But I also think that, this Ukraine peace deal, mind you, I think Putin is not sincere. I think Putin is just buying time. But I don't think you're going to realize that Putin is just buying time before December 9th. So it's actually a bullish catalyst versus a negative catalyst. Now then, of course, a lot of people are like, but Kevin, crypto's in this weird bear cycle. But I actually think what's happening in crypto is what I call the anti-treasury stock meme phase. So in other words, you had this massive momentum in treasury stock, crypto treasuries, and now you're getting the anti-meme movement because people are making more money on stocks than on crypto. So they're taking profits on crypto. I don't think it's a fundamental indicator. I don't think it's a very good leading indicator for what's going on in the market. It's pretty hit or miss. Even Bitcoin's hit or miss. Alt 5, for in my opinion, Alt 5 is a scam. And this is my opinion. And the reason for my opinion I gave 2 months ago. It's a video that actually did not get a lot of views. I posted this video two months ago. It got 27,000 views. Nobody cared about my warning. But over here, the stock was $7, $8, $9. And I called it out as a scam. I said that, this was a crypto mining play in 2019 that somehow failed because of a storm on Halloween in 2020. Right. I'm like, is this insurance fraud? Then they got into doing an energy upgrade scam. Then they got into doing an appliance recycling scam. Oh, I guess those are one of the same. Then they got into applying for a crypto exchange license in Lithuania. And then they got into biotech and doing drugs. Somebody's doing drugs here. But really what Alt 5 is, which I have a support line for the stock at 0. I think it's going to 0. It's going bankrupt. Really what it is, it's just a rug pull of people who see a video on Fox News of the Trump family going, hey, we're going to revolutionize finance. I'm like, guys, this is where I issued my warning. Right here is where I issued my warning. You could look back and look at the dates. I issued my warning. I'm like, this is a scam. It is a scam. That's it. All they're doing is issuing stock at Alt 5 to buy World Liberty Financial Token. Why would you buy World Liberty Financial Token? It's to provide exit liquidity. So that way the poor saps watching Fox News going, Donald Trump's going to revolutionize finance, honey. They put their money into the scam. And then it goes down and they're like, oh, what the hell? Why's it going down? This is a rough ride, honey. Well, no, duh. Did you read the financials? Did you read the business? It's a fully disclosed scam, is my opinion on it. I don't think they misinformed anyone. I think they were blatantly blunt in their financial statements, but not on Fox News. On Fox News, it's, we're going to the moon, boys and girls. So I think stuff like this is dragging down the whole crypto ecosystem. I also think that Stretch is probably going to go down as a Ponzi scheme, STRC, which is one of the feeder funds for Michael Saylor's strategy. And so it's not a surprise, I put in Saylor, it's not a surprise that strategy right now is selling for less than NAV. They've got $56 billion of Bitcoin. They're trading for $49 billion. It's because you have sort of this anti-treasury momentum. All momentum comes down. The anti-treasury momentum is leading to a sell-off in crypto. That's my opinion. I don't actually think it's a fundamental leading indicator of recession because while I do think we have a 50-50 shot of going into recession, I think if we go into recession, Bitcoin's going to go down way more. So will stocks. Risk assets will go down a lot. Interest rates will come down a lot, so it'll be great. I actually think it'll be great for real estate, but a very specific kind of real estate. In fact, here, look, if you go to reinvest.co, scroll past the Reinvest AI product, scroll past Invest in AI and Reinvest. I think it's right here. Our real estate. Did I put it here? Yeah, here. See, high quality, high growth, slow build locations. That's almost where all of our real estate is. And I really want you to think about that phrase. High quality, high growth, that's where the jobs are, but slow build. So what happens when you keep supply low, but people keep coming in? So demand up, supply low, and then add to that fuel lower rates. What do you think happens? It's like shaking up a can of soda and then opening it. It's gonna explode up. That's my take. That's obviously, I mean, it doesn't matter to us because we don't have any debt on our real estate. Like we have literally no bank debt. We don't charge fees. We don't have like acquisition or disposition or all this like bullcrap fees that all these funds are doing. We're a real estate and AI company. That's it. You can see what our AI is and what we're doing, and you can see the properties we own. There are like 12 more I need to add to this list because we just bought like 11 or 12 properties. So we'll have to add to this list, but whatever. So point being, I like kind of bullish, honestly, between now and DS9. Now, maybe I'll be wrong. People like I did this in April as well. In April, I'm like, hey, like tariffs are bad, but we're not going to see the effects of those tariffs until a while in the future. It's going to take 6 to 12 months for us to see those effects. And then I said, so, strategy could actually be buying and then just set a trailing stop if you're nervous. Like last week, I bought the dip, reallocating to my top 10 stocks to buy for the next 10 years. And, my vision in April was that it's going to take a while for the bad news to hit. And trailing stops, if you're nervous, are a great tool for getting in. Because if you're nervous, worst case, you set your limit to get out, right? Topic for a different video, though. Now, there are some things that are bad, but people don't pay attention to these bad things. Like, for example, the Chicago MNI Business Barometer Index indicates that employment is falling at a faster pace. This is bad. We know this is the problem. Backlog of orders worse since March of 2009. That's not good. Overall index down since May of 2020, worse since May of 2024, and it's seen as a leading indicator. That's all bad. It could be, though, because we had a lot of inventory building during the tariff disaster, right? So I want you to think about that. You build up inventory during the tariff disaster, all the taco in the summer and everything. People are buying like crazy because they're trying to get ahead of the, increases in price. So now all of a sudden, you're kind of seeing a give back. Retail sales for September are trash. Chicago M&I's bad. That's not good. But some of that could be a normalization post the COVID craziness. So it's not a foregone conclusion that it's definitely bad. Certainly not near-term bad. Quick shout out, by the way. I just saw Manuel, you just joined. Lifetime access to the foundation membership, Reinvest AI. Robert joined. Ryan joined. Thomas joined. Marshall joined. Benjamin joined. You all just joined Reinvest AI. There's Ashford. Ashford joined the Meet Kevin membership, that Black Friday sale. There's another Meet Kevin membership. But most of y'all, Reinvest AI. Wow, hopping off on that. Well, thank you for joining. But anyway, going back to here, then of course you still have the private credit disasters, right? I mean, MIT thinks AI can replace 11.7% of the labor force. All this is, by the way, in the Meet Kevin app. Kroll Bond Rating Agency expects more defaults in 2026. We talked about Jay Clayton and this pipeline of defaults still coming. These are all bearish things for 26. The depreciation Michael Burry issue, private credit, liquidity problems, the slow bleed of labor, all of those are real issues that we're going to have to get through between now and the end of 2026. If we can get through those, hey, JP Morgan will be right. We could boom. This article here about bull case 20% up by 2027. Yeah. And we see that in their JPM outlook. Their JPM outlook for 2026, remember what they're very enthusiastic about in investment-wise. Let me just get to the bottom line of this because we had covered this one before. They say the biggest risk right now is not having exposure to transformational technology. I think that's a little bit of a sales pitch. They argue like, could there be an AI bubble? Yes, but there's a bigger risk not being a part of the bubble. But the 4 opportunities they say are Mag 7, which I actually think will be most secure in a recession. Like they're still gonna go down, but they're not gonna go bankrupt, right? And at least we don't think so. I mean, I guess Tesla's part of there, see how much money they blow on XAI. But anyway, they talk here, number 2 opportunity, they see networking equipment, transformers, who knows, maybe Micron, SanDisk, Vertiv, right? MP is basically what they're talking about. I actually also mentioned over here, likely less risky than fun play Chipotle, Home Depot, the consumer stocks. But those consumer stocks are in a hole. And since I wrote this, when did I write this? I wrote this, when did I last look at this? I think I looked at this like a month ago. It's probably like 3 weeks ago. Consumer stocks still come down quite a bit. But then the other things they look at, look at this. This was before the Gemini and TPU boost. Big companies like Google may compound AI integration faster, the vertical integration. We literally foreshadowed it right here. We wrote it down. Very interesting, because they wrote cloud businesses of Microsoft and Google are vertically integrated, and I picked Google out of them. So that was a few weeks ago. That's why you got to subscribe and watch the whole videos. And since then, we have launched our AI beta product at househack.com. I mentioned that up here. And we actually did a lifetime membership instead of 2 to 4 years. So that's kind of cool. That's at househack.com. What do we have here? Private credit companies. So yeah, we're basically hearing here Mag 7 best upside. There was some super micro enthusiasm. They said YOLO into private opportunities like GPT, Anthropic shares is what they said, or robotics. That's kind of what they argued here. Although we did get a big Google shout out there before the TPU Google announcement. So that was in the JPM piece. Mind you, they also talk real assets as a store of value. So I was actually impressed because they do talk about real estate as well as a hedge against inflation. Here, the housing market shortage. So they spent quite a bit talking about the benefits of investing in real assets like real estate. And of course, I did the shameless plug, real assets such as HouseHack. Yes. That was the JP Morgan piece. That's really the foundation for why you're seeing that 20% bull target over there. Now, some institutions this morning are talking about, they reference the Bitcoin slide here as well. Deutsche Bank talks 5 reasons for the Bitcoin slide. They say a drop in equities and risk sentiment. That's temporary, though. That's greed and fear problem. You've got hawkish turn in U.S. monetary policy. Okay, whatever. That's already flipped to bullish between now and December 10th because, we're expecting the rate cut now. So yes, Powell went bearish. Now things are going positive, so you expect some bullish reversal here, right? Outflows from crypto vehicles, profit taking, yes. So I say that IBIT is really losing its virginity of a market correction. So that's because IBIT has never been through a 30% decline in Bitcoin prices. So it's not a surprise you're seeing the largest outflows for this product because it's the first time they've actually experienced a 30% decline. Bitcoin actual holders have already been through this many times before. So, not really a big deal there. And then TS Lombard, they do talk about weak corporate tax payments for September. Not bullish, potentially because of the normalization post the tariff pull forward. They talk, a little bit about how Trump will probably lose the Republican majority in Congress next year. I actually generally see a stalemate in Congress as bullish. We see, I see the tactical rally between now and DC9. What else did they mention here? Drop in margins. Margins and employment and wage growth declining are the longer term issues. It's basically what TS Lombard here is saying as sort of like a little recession warning sign. And it's fair, totally reasonable. It's like I was analyzing a little bit earlier, why is Workday stock down 9% and why has it gone nowhere in 5 years? I think it's mostly just because people are nervous about the labor market because there was nothing that I saw in the earnings call that suggested nervousness, and they actually beat and raised on their numbers. So, it's just people are aware that we are going through a slow bleed in the labor market. Look at that Dave & Buster's, man, up 7% again. We've been talking about this, I think, every day since Friday. in our course member live streams in the morning. Which, remember, you pay once, you get lifetime access to those course memberships over at meetkevin.com. We've had members since 2017 in there. Somebody this morning mentioned, I've been here since 2019, and it's I see people mention that all the time, but that one I saw specifically this morning. It's great. You get a lot of value out of that. That's at meetkevin.com. Black Friday coupons live. Google. The one thing I want to end with is you want to watch Google a little bit. So Google ran 10% since the TPU announcement, okay? 10% on the TPU announcement is insane. It literally ran an AMD, an entire AMD it ran up on the Google announcement, or on the TPU announcement. That's kooky duked. However, it is a little bit of a risk gauge. If Google breaks out a 331, it means we're going uber bullish, everything's going green again, we're going to the moon. Google being kind of flat to negative is a little bit like, people are cautious. People are diversifying, people are raising cash, people got, caught with a tail between their legs on leveraged ETFs and margin, and they're a little gun shy about chasing, the momentum. Because there's no other way to describe a 10% increase in the stock when EPS might fundamentally move 3% over the next 2 years on a TPU inclusion. To say that they deserve a full AMD build-in here is just wild. So this is probably healthy that it's not memeing more. But anyway, this gives you a breakdown of everything that's going on. And then, of course, always remember, go check out the product we got. Reinvest.co or househack.com, same company. You could learn about the AI product, what you get now versus what you get in the future. Keep in mind, we have a lot of development and future phases. So it's a very early release product that comes out in December. You could read what's coming next year, what we're in process on building, and what's out now. What's out now is obviously very limited relative to what's coming out. But what's coming out, once those features come out, we expect to raise the price. Raise. So anyway, check that out over at househack.com or reinvest. And then, of course, remember that you could also get into the alpha report by going to meetkevin.com. You get that reinvest course as well, which I'll be dropping next week. A continuation of Trumponomics and a bunch of new lectures, which is very exciting. Some diversification, debt, trading, finance for children, insurance, liabilities, entities, real estate, long-term wealth. And this is in addition to all the other courses as well. So pretty exciting. So yeah, there you go. Cool. All right, great. So what else do we have? I mean, that was, I think, pretty thorough, eh? Yeah, I mean, I'd argue quite thorough. Okay, let's go see if the Doomers have anything for us in today. The Doomers, or the CNBCs. CNBCs, I don't know. I've been a little disappointed with the CNBCs lately. They've Bloomberg has been a little better than CNBC's. Kind of wild. I don't know. Maybe that's just my impression as of late. But we'll bullish catalyst. All right, let's see here.
The consumer. We had a lot of questions about the consumer going into the holiday season.
Holiday shopping.
Last week, we saw holiday spending up 4.5% year over year. Seems like a kind of bullish sign going into the holiday season.
Yeah, I mean, and Courtney's data shows us more bullish reasons to be excited about it. So I mentioned this at the top of the show that consumer discretionary has been one of the strongest sectors actually out of this volatility that we've just seen. And I think that that's a good sign. A lot of times you look at discretionary versus staples as a signal of cyclicality. We'll see what this holiday season holds. I imagine that there's going to be a lot of news about discounting and incentives and all of that. But into 26, again, expecting some stimulus, right? Expecting some tax refunds that are going up. I think the consumer has a chance here, and they're going to have to fight for it because we're still up against some inflationary pressures. But I think the consumer has a chance. So I wouldn't count it out. And discretionary and staples have been really poor performers year to date, relatively speaking. So if that cyclical recovery and reacceleration does start to take shape in 26, I think discretionary might be a nice place to be.
I think it depends where you are. So we're talking to it.
I mean, she's totally right. That's what we were just talking about. Dave & Buster's, fun, cheesecake. If we soft land, dude, discretionary's got dirt cheap. That whole segment, dirt dirt bag cheap, which is great. So pretty exciting. Okay, cool. There's that. Let's keep listening to her for a second.
From housing costs, from price of food, vegetables, which the White House has now identified, that doesn't leave a lot for discretionary spending. So you take that, and I think that's about half to
That's
two-thirds.
the downside, is does the consumer have more money?
That's probably where you want to be because they're not as...
You know what I'm going to do? Because I said I wanted to do this yesterday, but I didn't do it yesterday. I want to do it for you all. Follow me on Instagram, okay? At me, Kevin. And I'm going to go to Carl's Jr. And I'm going to go see what the burger price is. But when does Carl's Jr. serve lunch? When does Carl's Jr. serve lunch? Because I was told all day breakfast serves lunch all day after breakfast ends, typically around 10:30 a.m. All right. I will try to get to Carl's Jr. today and do a little review of can you actually get a double burger for $5? That's the challenge. Because right now, a side of French fries at McDonald's almost cost you $5. And it's like, bro, this is a scam. You know, people are pissed. And I don't blame it. It's crazy how expensive things have gotten. Somebody here writes, I want to invest in Reinvest. You can. Read the offering circular. Go to hassett.com or reinvest.co, whatever you want. The same company. And yeah. Cuts take time to realize we need the printer for monetary policy change. Of course. But the stock market doesn't care about how much time it takes. The stock market starts pricing that crap in fast. Stock market's like, nah, man, we cut. You know, it's kind of entertaining. Do you think you can create a super stripped down version of the House Hack app for people that are looking to buy a house? Well, that's what it will be. Not a super stripped down version, but that'll be a component of it. Like our valuation AI is going to be, in my opinion, a tool that it's not like the Zestimate because it actually looks at the property, the photos, right? And it's like, okay, based on how much you need to spend to renovate the property, here's how much we think the property is actually worth. You know, if you, like the Zestimate doesn't do that. The Zestimate just takes comps. And I'm like, who gives a flying F about the comps if you don't look at the damn property? You know what I mean? So like, that's exactly what the Reinvest AI does. And I think it's like a wealth sniper. Now, that feature comes in 26. It's gonna take time. But I think if I can nail that, which I'm pretty confident we can, based on what I'm already seeing we're nailing, then I think we create an IPOable product. Now, I don't know. Maybe we'll go into recession, or maybe it won't work. I don't know. I can't make guarantees, but that's my goal, right? So, Bitcoin's about to hit 89,000. So, I'm very optimistic and enthusiastic about that. Yeah, no, for regular home buyers. Same thing. Same answer, bro. I mean, what's the difference? Don't you want a good deal if you're a home buyer? Don't you want a good deal if you're an investor? The answer to both of those questions is yes. It's the same thing, man. It's the same thing, homie. All right. What do we got over here? Nothing.
Imagination and...
Let's jump in over here. Let's go here.
So if you're another company talking about the 21 Capital, which is merging with the Cantor Fitzgerald SPAC, your pitch is to get investors to pay a premium that they couldn't already pay for the biggest elephant in the room, which is MicroStrategy. So it's a tough kind of story to sell, and we're going to continue to see a number of these companies getting towards that.
We had just started to see other token treasury companies come online. Are they still coming up?
It's false. I want all the bad deals. Well, then you can sort by best deals and then scroll to the bottom and start at the bottom.
Token, which is native to crypto.com. They have a SPAC deal. So we are still seeing these deals announced. But when I talk to bankers and investors, there were a number of foundations that wanted to unveil these announcements. And there's just not the appetite. As you can see, you look at the pullback for the Cantor Fitzgerald SPAC, it traded at about $50 a share. Now it's closer to 14. That Columbus Circle SPAC really popped around the deal announcement, but is trading at its trust value.
There were so many of them though, right? And they all popped, and it just seemed weird, right? That they would all just pop, and then literally from day one, that stock price would come down and down and down. What's next? I mean, given that we're seeing a market
What's next, they say. What's up, Pierce? Pierce just joined. Caleb just joined. What up? Welcome aboard. Just in the last few minutes here. Appreciate you.
for the rest of the year, or is there still a window?
That's they joined the Reinvest AI membership.
Likely will be publicly traded in December, deals done and dusted. The question is, will others follow in suit? And when I spoke to some investors in the space, they kind of called it as kind of a marketing campaign. So the issue for these follow-ons is you're either an influential company like MicroStrategy or you're trying to mimic that. We've seen investors very quickly kind of shy away from those following in the footsteps of these giants. Again, especially when you have a pullback, if everything's going up and to the right, it makes it appealing. But if, as some critics call it, financial alchemy, if that continues to show cracks, then you kind of dump the Me Too's. And if you're going to play the space, focus on the bigger.
Somebody here says, thoughts on bank statement loans instead of FHA if there are no pay stubs? Why do you not have pay stubs? If you're getting paid in cash, how sustainable is that, bro? You gotta be careful buying at these interest rates with a pay stub loan.
And co-founder of
or non-pay stub loan.
And Wendy, thank you so much for joining. Okay, give us the bad news. We've seen some volatility potholes, as Amy Silverman calls them. I guess though overall the pullback hasn't been that severe. Are you saying it's going to be more severe?
I think it's more that we should expect to see continued volatility. If you think of what a difference a week makes, right? Last week, there was a lot of concern that the Fed actually won't cut rates in December. And now this week, as we started to see more consumer survey reports come out, we started to see Mary Daly, the San Francisco Fed governor, speak to her concerns around employment and potential job losses and weakening in the employment market. All of a sudden, that expectation for December rate cut is back on, and we see markets have really recovered so much this week.
So if it's good volatility, that's good for markets, right? That's good for traders. I mean, the fact that the December rate cut came back online meant that the pothole was okay.
Well, I think that's really what we are expecting.
Somebody writes, okay, your explanation that our AI is better than this estimate is brilliant. Well, I appreciate that, Boda. Appreciate that. So, people, okay. Some people, they ask me to speculate on next year. I can't speculate on next year. We're going to put one foot in front of the other. We're going to do great work for people. We're going to do everything we can to create a great product and a great service. Somebody says, if I painted walls and ceilings at a reno, but there's an old smell that's smoky, should I finish painting cabinets, odor blocker on subfloor before repainting? Yeah, I mean, if you have a smoky house, you really need to use a good primer. Like Bins. Look up Bins from Zinsser. Very, very good primer. And it's very expensive. You're going to pay about $220 to $250 for a 5-gallon bucket, depending on, where you buy it. It is very important that you do that. I've actually also used a specialty primer, a different one. I can't remember what it was, but I used another specialty primer on a concrete floor to deal with pet odors. That's different, but that's not your problem with the smoke. So Bins should be okay. You could honestly talk to GPT about using the Bins primer or another smoke product, but primer. Floors, walls, ceiling, multiple coats. Smoke is really, really hard to deal with. You got to get carbon filtration going. That's another thing. House Hack, we own like 4 of the carbon filters, and they're great. They don't solve everything, but they're a very useful tool. So, yeah, good luck. Smoky smells are very difficult to deal with, but you'll get there. More paint. Good question though. So, but will the app be marketed? Dude, I don't know how the hell I'm gonna market the damn app right now. I'm just pitching it on YouTube. We'll figure it out. Like, if you think about it, the kind of crazy thing is most AI companies, they have to pay like a giant sales force to go sell a product. I don't cost anything extra. I'm built in. So it's kind of a cool little edge for House Hack, I feel like. So I'm really excited about that. But yeah. Okay, cool. So let's see here. Let's keep going.
Certainly some contingency planning happening with the Trump administration in terms of how can those tariffs be implemented in other ways. It just creates this level of uncertainty, right? Where what does that mean ultimately? I think for investors, for companies, for consumers, there should be a continued expectation that the tariffs are here to stay. But any amount of uncertainty around that certainly will contribute to volatility in equity markets as well.
But you don't have to run to treasuries and put all your money there either.
Exactly, because there could be upside volatility as well, right? As we talked about, it really bounces around. So it's important to stay balanced.
Wise words and a great conversation there. Wendy Lee, thank you so much. Wendy Lee is Chief Investment Officer and co-founder of Ivy Invest. Turning to some tragic overseas news now, and we should warn our viewers that they could find this very distressing. The leader of Hong Kong has just updated on the scale of the casualties from a high-rise fire. Authorities are still battling to put out the blaze. At least 36 people are now dead and 279 people are still missing. We'll continue to monitor the situation, and obviously our thoughts are with the people and all of their families and affected ones.
Yeah. All right. Flip. Okay.
Digital has strong growth catalysts and multiple revenue streams. Jackpot Digital, symbol JPOTF.
Yeah, it was stagnant air issue. You'll know if it's stagnant air if you run like HEPA filters for half a day and then you turn them off and all the smell comes back. Then the smell is in the cabinets, in the drywall, whatever you haven't painted yet. Like the thing is, you have to remember things that are porous, like wood, drywall, paper products, all that crap soaks up the oils from smoke, like cigarettes or grease or whatever. And it's very difficult to get out. It's a pain. But new boxes also aren't that expensive, Like I'm not trying to say go spend more money, but like some of our projects, we just look at it, we go, look, man, like the time it's gonna take us to make this kitchen work. We just did one. We just had one where there was no dishwasher in it, and then it had the wall oven. And so I'm like, by the time I spend, all the labor to go from wall oven to not wall oven to regular stove, and oven combo, and I cut in a dishwasher, I will have rebuilt so many cabinets that I may as well just put in a whole new kitchen of cabinets, because the cabinets just aren't that expensive. So even with Trump's latest tariffs. Thank you for bringing up Workday earlier. Made my daily scalp goal. Let's go! Scalping off of the Meet Kevin show. Woo! I have no idea what you did, but good for you. Let's see here. Okay, cool. Okay. Okay. Yeah, okay, great. Where is... Okay. Let's see here. Why is CNBC just not loading? Whatever. Okay. So... The... Okay. Give me one sec. Cool. There we go. That's done. All right. Sorry, I just had to finish a little thingy-majiggy here. And beam that up. Done. Okay, good. Let's go look at some of the sticks here. We are about to hit 617, which is quite bullish on the Qs. And Hood's almost up 10%. Tesla's now slowly getting some life to it. And then I think Bitcoin's almost at, Bitcoin's almost at 90 now. BTC, CoreWeave's running. This is a nice bounce. Very nice bounce. Good for the holidays. Good for Thanksgiving, you know? Gives people an opportunity to diversify. Ours are custom cabinets and they're very pricey, painting the cabinets down. Yeah, I see that a lot where, you know, if you have really nice cabinets, it's kind of like, oh, but they're ceiling height, you know, it's got crown molding and they were expensive. I know, I run into that struggle too sometimes. Like, I had somebody who was bitching in my comments yesterday on my real estate video. They're like, you replaced a Bradford water heater that had the green light, meaning it was perfectly fine, with a cheapie from Lowe's. And I'm like, did you miss the part of the video where it was leaking rusty water into the pan? It doesn't matter if the light is green. Like, the light being green means the gas is functioning, you know, it's heating. But you could have a heater and a leaky pot, and the leaky pot causes big problems and floods out your garage. So I thought that was kind of funny. But yeah, point of that is sometimes you know, it gets to the point where it's like, I don't care what quality it was. If it's old, it's going. This happens. So then, yeah, if Bitcoin's moving like this, it makes you wonder if MSTR is going to get a nice recovery here too. Meta's flat. MSTR, Google's still down 1.5. Yeah, MSTR is trying to catch up a little bit. Yeah, look at that. Look at that volume coming into MSTR. Oh, boys and girls.
Bullish catalyst.
So, how do you make tiles white? You hire a professional glazer. All right, folks. Yeah, Tom, I want to do my Carl's Jr. visit today. I want to post it on Instagram, so we'll see. Follow me there, at me, Kevin. All right. Okay, good. So awesome questions, folks. Thank you to all of those of you saying you're considering investing in HouseHack. Remember, you could do that over at househack.com. Join the lifetime membership over at househack.com for that. Or, of course, the alpha membership over at meetkevin.com. So, all right, that's all I got for today. Maybe I'll see you later. Goodbye and good luck.